I'd like to welcome everyone and thank everyone for joining us. So today, we are here today for a webinar, and it is called COVID-19 and the Coming Depression. What is at stake for developing economies? We're hosting this webinar with two co-host organizations. Firstly, we're hosting it with NALEDI, and NALEDI is a National Labor and Economic Development Institute. It is essentially a labor think tank. NALEDI's mission is to conduct policy-relevant research aimed at building the capacity of labor movement to effectively engage with the challenges of the new South African society. Our other host is TSHISIMANI. TSHISIMANI is a Center for Activist Education. TSHISIMANI Center provides learning programs for social justice activists to complement their experience in addressing and finding solutions to the injustices faced by the marginalized and disenfranchised. And comrades will know that we are the AIDC, which is the Alternative and Information Development Center, and we are an activist think tank that produces and promotes alternative knowledge and analysis, which provides or enables popular movements to engage with the intersecting crises that flow from the natural, economic, and social challenges confronting humanity. Comrades, I'm also joined at the moment, if you can see, by Comrade David Hampson, Comrade Roger Silverman, and Comrade Michael Roberts himself. Comrade David Hampson wanted to say hello to everyone out there, so that's him waving his hand. And Comrade Roger Silverman is a political activist, teacher, writer, and socialist member of the UK Labour Party. Our guest speaker today is a Marxist economist and an author based in London. His writings cover a broad range of topics, including recessions, debt, inequality, and most recently, the COVID-19 crisis. I believe this is why then we asked Comrade Michael Roberts to join us today. And because he's a Marxist economist, that's why it's important that he's leading the discussion and I'm not. My name is Kia Sipato, if you didn't know, and I am based at the AIDC. I'd like to welcome you to this webinar. Thank you so much for joining us. And I'm looking forward to a robust and immense engagement. I also like to say thank you to all the activists, political activists, scholars, academics, and also trade unionists who have joined us on this webinar today. Thank you for coming through. It is kind of difficult that I can't see everyone, but I can imagine everyone's warm faces staring at the screens right now. So I'm going to hand over to Roger Silverman to introduce Michael Roberts, and then I'll come in afterwards.
Okay. Well, comrades, greetings to all of you on behalf of the Workers' International Network. As someone who has personally followed with great excitement the development of the revolution in South Africa over 40 years, it's a special pleasure to see you, comrades, as well as visitors from other countries too, all prominent activists in the labour movement. Internationalism has never been more than at this time. I'm proud to introduce today the Marxist economist Michael Roberts, someone who I've known for more decades than I like to admit, and someone who is qualified like none other to explain the economic consequences of the pandemic in the developing world. We are meeting at a crucial turning point in world history. So far, more than 250,000 people have died worldwide, and the total could reach millions. But this pandemic is just the start of the convulsions that are going to grip the planet. A prolonged economic slump like that of the 1930s, or even worse, lies ahead. Already before the pandemic struck, there was an unprecedented global wave of uprisings stretching across at least 35 countries, spread across 4 continents, with tens of thousands on the streets, braving tear gas and bullets, and bringing several governments crashing to their downfall. turmoil and social unrest over the years to come, these movements will arise again all the stronger across the world and bring about the opportunity for decisive change. I would like to invite already subscribers to read our journal, On the Brink, and to visit our website, www.onthebrink.online. We'll be holding Zoom meetings of our own periodically, including on the role of agribusiness, on the crisis in the workers' parties, on the revolution in China, and other topics. And we'll keep you informed by email if you'd like to let us know. Michael is, of course, the author of The Long Depression, Marxism and the Global Crisis of Capitalism. I can also let you into a little secret, that in his alter ego, Michael is also a former leading economist in the City of London. So his unique insight also comes partly from his previous vantage point in the belly of the beast, so to speak. What he's known for most of all, of course, is his outstanding blog, www.thenextrecession.wordpress.com, which for countless readers worldwide has thrown light on the workings of the capitalist economy worldwide. So I'll be happy to hand over to Michael now. Thank you.
Thank you so much, Roger. I just wanted to give again David an opportunity to wave if you'd like to.
Well, it's a marvelous occasion, and I look forward to the discussion. Thank you.
Thank you so much, David and Roger. We're going to say goodbye to David and Roger now. So comrades will only be bestowed with me and Michael's beautiful and gorgeous faces. I'd like to give Michael an opportunity to also introduce himself and to say hi to the peeps out there.
Well, thank you, Kia and Amandla, for the invitation to make this presentation on the current coronavirus crisis and its impact upon the world economy, capitalism, and also I hope to deal with in my presentation what's happening, its impact upon Africa and South Africa. And in that area, I'm also hoping for good response from participants to tell me more about what is happening so that I can learn as well as telling you about perhaps the world economy itself. But I think the introductions I've had are very praiseworthy, so I only hope that I can meet the bill and the confidence that Roger and yourself have put forward. But I'm depending upon the participants to help me out and develop the discussion as we go along. But back to you, Kia, for the moment.
Thank you, Michael. Just wanted to let comrades know again that this webinar is one of a series that will be starting. So please look out on social media for what we're going to share. And just also to let everyone know that we are live streaming on Facebook. So if you should drop out on Zoom and would like to continue seeing what's happening, just go to Amanda Media on Facebook and you'll be able to follow live. After this broadcast or webinar, we will also have it uploaded on YouTube for you to please look at. And if maybe you feel like you want to hold on to it because Michael will be sharing marvelous information with us, you can get the recording if you email rakang@AIDC.org.org and we will send you the recording itself. Also, just to say, comrades, that Michael Roberts will be sharing a presentation with us during this webinar. And if you'd like a copy of the presentation, you will be able to find it on Michael Roberts' Facebook page. Another reminder is that we're hosting this webinar with two co-host organizations, which is TSHISIMANI, the Center for Activist Education, and NALEDI, that is a labor think tank. So Michael, before we go in and before I hand over to you, I think we had thought that to sort of enter this discussion and excite you and excite those who are watching us, we wanted to open it up with 3 questions that I think have been percolating in everyone's minds thus far. So I'm just going to give you the questions and you can decide to answer them through your initial intervention or delve into them right now. So the first question, Michael, is I think everyone would like to know, what is the difference between a recession and a depression? Because I mean, we hear a lot of the times that there was, of course, the 2008 and 2009 global financial crisis, and we've heard lots of words around recessions, particularly in South Africa. And then occasionally, some people who are tuned in would let us know that there was a Great Depression that took place, and not many of us know the differences between this. So if you could just tackle it for us, it would be great. Another question that I'd like you to please tackle, Michael, is there's been a lot of economic woes and challenges for emerging markets. So it's not nothing new. But what does the COVID-19 pandemic mean for the scale of the woes that we're going to face? And what are the implications of this? And the last question is, debt and an increasingly financialized economy seems to be the bedrock of some of the major problems of this recession, even though some mainstream economists want to attribute the problem to the pandemic alone. Are there any links to the 2008 and 2009 global financial crisis, and how far back can we trace this problematic trajectory? It's enough for me now. I'm going to hand over to you, Michael.
Well, thank you, Kia. Those three questions which your participants have presented beforehand and you've presented to me are hopefully going to be dealt with in this short presentation that I want to make to you. If they're not, then I'm sure participants will come back to tell me so, and we can perhaps discuss it a bit further. But all those questions, whether we're in depression, what the difference between depression and recession, how the coronavirus pandemic is going to hit the world economy, but particularly so-called emerging markets, which haven't been emerging, and also the question of debt and the relationship between debt and this crisis. They're all very relevant questions. So with a bit of effort, I'm now going to try and share a screen with you, everybody, so that you can see. Here we go. I'm hopefully clear. That's clear. Yes. So what I want to do is just run through a number of issues that have been related to the pandemic, how that has been affecting the world economy at the moment and how it will affect the economy in the world, but also perhaps to draw in some specific impact upon Africa and particularly South Africa towards the end of this presentation. Obviously, participants know a lot more than I do, so it'll be interesting to see if they can add to this or disagree in any way. But the point is now, at the current moment, we've had just something like 2.7 billion workers worldwide affected by some form of full or partial lockdown measures in their countries. So that's 81% or over 80% of the 3.3 billion workers there are in the world affected by the lockdown. This varies in the level of drastic nature of that lockdown. It's more relaxed in other countries. And as we know, over the next couple of weeks or so, many countries are governments are beginning to relax the lockdowns that they've been applying up to now. But these lockdowns as a result of trying to control the pandemic and reduce its spread and reduce the number of deaths around the world has produced an absolutely unprecedented level of reduction in output, investment and employment across the world. Something like, we've never seen anything like this. It's worse than the Great Recession of 2008-9. GDP is likely to be at around about 3 to 5% on a global scale, lower than it was in 2019. That is a dramatic drop. It doesn't sound very much in percentage terms, but when you see the impact that it has on the world economy in many countries that have already been struggling, then it is a really serious development. Most countries will probably see something like 25 to 30% fall in this current quarter that we've got in the moment, which is from April to June, across the major economies, but also in the countries of the so-called emerging economies as well. So something like a third of the sectors in the major economies are affected by this lockdown. And every month that passes, there's a 2% loss in annual GDP growth. And participants should be aware that this loss cannot be returned. It's a bit like digging a great hole, coming out of the hole at the other end, but not being able to fill it up again. That hole is lost forever. Employment opportunities, income, output and investment has just disappeared and that cannot be replaced. One Nobel Prize mainstream economist reckons that the short-term collapse in global output is likely to be rival or exceed anything we've seen in the last 150 years. That is how significant this slump is. And the IMF chief, Kristalina Georgieva, reckons that over 170 countries will experience negative reductions in their output per person this year, 170 countries. Millions of jobs have gone globally. The COVID crisis is expected to wipe out something like 6 to 7% of working hours in this quarter. That's equivalent to over 200 million full-time jobs disappearing in just one quarter. The global unemployment is going to be rocketing, according to the International Labour Organization, such that the income of the poorest parts of the world will suffer a dramatic decline. On the right-hand side of this table, called High, you can see there's a figure that the ILO has of $3.4 trillion disappearing in terms of the ability for people to have decent incomes and to survive with their livelihoods. It's going to be a dramatic reduction in their incomes, and an estimate made by Oxfam is that this will mean 500 million people will be forced back into poverty. That is the Oxfam level of £5.50 a day, whereas you'd expect some people to be coming out of that poverty level, which is low enough anyway, but now there'll be 500 billion people forced back into poverty as a result of these lockdowns and the collapse in the world economy. And for the first time since we began to measure growth in so-called emerging economies or developing economies, that includes China, India, South Africa, Brazil, Argentina, all those countries in the so-called global south, then normally those emerging economies have some levels of growth. Even in the Great Recession of 2008-9, those countries in total, on average, did not slip into a slump. The reason for that is because China and India continue to grow, particularly China during that period. If you'd taken those two countries out, then it would have been a slump. But now, even including China and India, we're going to see the slump of about 2.5%, according to measures made by various people, that for the first time since records began looking at emerging markets and going back, as you can see on this graph, to the 1960s. So this is just an incredible reduction. And most seriously, for the poorest countries, for the emerging economies, what is happening is all those capitalists who invest in these emerging economies by investing in the stock market, buying the bonds of the governments and corporations there, and by shifting their businesses there, they have suddenly decided to take all their money out again. So we're seeing a huge outflow of capital flows from these countries, both debt and ownership of various stocks and so on and companies, to the tune of something close to $100 billion in the first few months of this year as a result of the pandemic and the fear that these investors have that they will not see their money when these economies decline. They will not see their money give them any returns whatsoever. So it's a dramatic fall in the flight of capital. This is a disaster for particularly Africa. The World Bank reckons it will push sub-Saharan Africa into recession for the first time in 25 years. We'll see a fall, anything between 2 and 5% as a result of the pandemic. And it will cost anything like $80 billion in output for the sub-Saharan African economies, which of course includes South Africa. And worse still, not just the loss of jobs, not just the loss of income, not just the loss of investment, not just a flow out of the countries if capital by foreigners taking their money away, but also we're going to see at the right at the bottom a serious increase in a food crisis. Acute hunger is going to set up, according to the figures of the World Food Programme, we could see a doubling of the number of people who are at levels of acute hunger as a result of the pandemic. And this in 2020 compared to 2019. This is going to affect millions at the barest level of human existence as a result of the collapse of economies around the world. Now, as Kia mentioned, and one of the questions raised was that that I want to point to you that this was not as it were, just a bolt out of the blue, an asteroid coming in the sky and hitting the world and destroying all the dinosaurs. This was already, the pandemic was merely a tipping point for what was happening in the world economy anyway. It was beginning to decline quite sharply towards the end of 2019. Some countries, some areas, Japan was in recession of the G7 economies. The Eurozone economies were virtually in recession. The UK was in recession at the end of 2019, and the US was slowing down very fast towards a very low level of growth. Outside of the G7 and the G20 economies, Argentina was in a slump. Brazil was close to a slump. South Africa is in a recession, as we see now, and a number of other countries are also, Mexico also in a slump, all quite close to doing that. So the pandemic and the impact of the virus and the lockdown was a tipping point for an economy that was already on a world scale beginning to move into recession. And that's quite important because it answers partly the question of how quickly we're going to get out of this. But we're not going to get quickly out of it, the world economy, if already we were sliding down before the COVID virus hit us. And I argue in my book, The Long Depression, and in other books too that I've written, that the key to understanding a capitalist economy and the world economy is what is happening to the profitability of capital investment. Capitalist companies do not invest in order to provide us with things or services that we might need. They wouldn't make them, of course, or produce them if we didn't need them, but they're not going to produce them unless they make a profit out of it. Profitability is what matters to capitalist economy, to the capitalist mode of production. So the big companies around the world have to make a profit. And you can see on this graph, if you look at the G7, the top 7 economies in the world, that the rate of return on capital has really got quite low, particularly since the beginning of the 21st century. And it's way, way lower than it was in the so-called golden age immediately after the Second World War in the 1960s, when capitalism could grant a lot of concessions to workers, particularly in the G7. But since then, profitability has slumped. It didn't recover very much in the 1980s during the terrible period for workers of a reduction in their trade union rights, in privatization of public services, and all the sort of repressions that went on, and of course the apartheid regime in South Africa. But it recovered a bit using that, but now we're in a depression in profitability. So this collapse in the world economy is a world economy that was weak because profitability was weak. It was not in a position to absorb this sort of impact that we're getting from the coronavirus. Here's a graph of the South African profitability rate, which I drew up before this presentation. You can see it's not pretty similar to the G7 one. You have quite a high rate of growth in the post-war boom. Then you have a big profitability crisis in the 70s and 80s, just like in the world. And then with the ending of apartheid, actually, with the recovery in the neoliberal period and so on, and then the switch out of apartheid into black majority rule did not produce, was actually an advantage to South African capitalism in some ways. They were able to significantly increase the rate of profit for a period of time as a result. But now we're back in this depression period, and South African capital is just as weak, if not weaker, than the G7 economies. In this period, South Africa's rate of exploitation has dramatically increased. Since 1975 and the neoliberal period, the exploitation of workers through the methods that I've just described, particularly repressing workers' ability to fight for better wages and conditions, has led to an increase in the rate of exploitation. It's the amount of money, profits per what they have to pay for wages that companies are able to get out. That's continued to increase during black majority rule right up to the end of the 1990s, although the situation is not so great now for exploiting the black and South African workforce since the beginning of the 21st century. And wealth inequality in South Africa, which is well known, is really bad. It's that Gini coefficient, which is mentioned there of 0.67, is significantly higher than most other countries in the world. Inequality in South Africa is one of the worst, if not the worst, levels of inequality in wealth and also in income. 10% of South Africa's top 10% own 90% of the wealth. And 80% of South Africans have no wealth at all. What do we mean by wealth? I mean, do they own property without any mortgage on it? Do they have savings? Can they invest in the stock market with savings? Do they have bank money in the bank? The answer is they have virtually no wealth at all, 80% of the population, if that's what we mean by personal wealth. While 10% have all that, 90% of that wealth. And there is a figure that shows you how unequal it is. South Africa, within its peer group, other sub-Saharan countries, but also the big economies of the world, you can see that South Africa is the most unequal compared to anywhere else, except possibly Namibia might be pretty close to it. That's an indication of the extreme difficulty it is for the vast majority of South Africa's population to deal with a slump that we're beginning to see and impact the world in general. And as I said before, South Africa's growth was already grounded to a halt. Then in 2019, it had moved into a negative territory. You can see gradually for the last 10 years, it has been struggling to maintain any sort of sustainable growth that could develop employment, investment and incomes for the majority of the population. Even before the virus, South African capital was in serious trouble. Now, back in February, your finance minister, Mbweni, said that yes, it's not good, but we still expect growth in South African economy of just under 1%. And over 3 years, it's going to grow by just over 1%, which of course is a ludicrously small amount, given the expansion of the population and the difficulties that the majority of the population faces. But of course, even that growth rate of about 1% is totally out of the question. Unemployment has been rising already before the crisis, and heading back to the levels we've seen after at the beginning of the century. Investment has been stagnating or falling over the last few years. Now there's a massive outflow, as I said before, from South Africa's external payments accounts. So there's been, since early February, $10 billion have disappeared. Foreigners take their money out. And given that the dollar reserves at the South African Reserve Bank is only 55 billion, you can see if this continues for the rest of the year, South Africans will be unable to meet the demands of foreigners for getting their money out. There will be a total collapse in the external account. And already that's been expressed in a significant drop in South Africa's currency, the rand, which has significantly dropped over the past few months, like many others, but particularly in South Africa as well. External debt is rising sharply, so this money is disappearing. The reserves in the central bank in dollar terms are weaker, they're being sucked away, and external debt, the commitments that they have to foreigners, continues to rise. Here's a breakdown of that servicing of that debt. Servicing of debt, the interest paid on that external debt, has doubled over the last few years and is now averaging nearly 12% of the money available to the government in tax revenues to meet all the things that require public services and so on. So 1 in 8 dollars or rand that the government has disappears in paying interest to external creditors. Those creditors are China, 20% of the debt is owed to China, 30% plus is owed to private holders, and the rest is owed to multilateral institutions like the World Bank and the IMF. So there's a huge amount of external debt that has to be met and serviced on a regular basis every year. And external interest payments are 55% go to private creditors. So even leaving aside the World Bank and the IMF and government organizations like China, that the vast majority of this debt is being paid to hedge funds, fund investment managers, and other banking institutions around the world. Now foreigners don't think much of South African debt. It's dropped dramatically in its risk quality. They don't want to invest here, and we're seeing a very sharp reduction in the credit ratings, which are required to make investors feel comfortable about investing. And that means that less money is going to be available. The ability for the government and institutions in South Africa to borrow money abroad is going to be much more difficult. And as I showed before, the currency is crashing. Just in case you're not aware, when it goes up on this occasion, it means you need more rand to get $1. So we're up in the levels of 18 rand to $1. You can see the dramatic increase that's been taking place during the period of the pandemic. And not only external debt, but rising government debt too. South Africa's government debt has risen quite sharply since the Great Recession of 2008. No sign of it coming down because growth has been weak and because the government has had to keep borrowing in order to try and meet its obligations on the spending front, which of course have not been adequate enough. The budget deficit has been widening. The budget deficit last year was hitting 6% of GDP. It's going to be a hugely larger figure as we go into 2020. And all that means that the South African government doesn't have a lot of funds to help all those people facing the COVID pandemic, the lockdown, and the loss of their jobs and incomes in South Africa. It can't support them because it's got high debt, it can't borrow any more money easily, and it's not prepared to tax at least the rich any more than it is at the moment. So here's a measure of the amount of money that your current South African government is prepared to put in to deal with this pandemic. It's at the bottom of the list. South African government, as a percentage of GDP, is putting in less money in whatever form it is compared to any other country, including India, at the moment, so far as we've got. So the government is appealing to international organizations to help it out. It's asked the South African Development Bank for money, hasn't said anything. It's asked the World Bank for money, who's offered them 50 million, that's all. New Development Bank, 1 billion. And the International Monetary Fund, who only offers money with all sorts of conditions on repaying the loan and controlling your spending and so on, has offered 4.2 billion, 5 billion in funds. So you've just seen that already 10 billion has left the country from capital flows by foreigners. So this is a pathetic amount in order to respond not only to the loss of funds for the reserves, but also to meet the needs of the people in the pandemic. The international organizations have failed miserably. And also most of this money is loans. It means it's still got to be paid back and still add to the debt in the future. Meanwhile, private sector activity is diving. See that figure hitting 35? That's the indication of that. That was only yesterday. South Africa's activity index has dropped to levels never seen before in the South African economy. And huge jobs are now threatened across South Africa. Something like 7 million jobs in a worst case scenario could be lost if the lockdowns continue and there's no recovery in the economy for some time. 7 million people already with a high level of unemployment in sub-Saharan Africa and in South Africa compared to in most other countries. This will be increased by a significant amount if this lockdown continues. So there's a huge slump coming. South Africa's National Treasury expecting huge losses and is now forecasting, compared to its February forecast of 1% growth, something like a drop of 16% in South African GDP this year, which is no wonder why your finance minister is calling for an opening up of the economy now in order to save South Africa's capitalist economy. But is that not a risk? Here are the figures from yesterday of the COVID deaths and cases per day in South Africa. Now, we know that South Africa and many other countries in the global south haven't had the same hit by the virus as we've had in Europe and in North America. But nevertheless, that partly is because of the ability to lock down, partly because South Africa is a relatively young population, and it seems that most people who are severely ill from this or die tend to be people like myself, elderly or sick in many ways. So, but then there are many people in South Africa who aren't healthy and aren't able to keep their health up as a result. So there's still a danger. But you can see, even if the figures are relatively low compared to Europe, they are still on the rise. And yet the government is desperate to get the economy functioning again, even though there is no control over the coronavirus in South Africa. My view is that we're going to see a very long period of recovery. It's not going to be a quick snap back in the second half of this year, even if all the major economies of the world relax the lockdowns and start to increase production. The World Trade Organization reckons that there could be no return to world trade for at least 2 years, maybe longer. And that's very, very important, because even if a country gets its economy back up and running domestically, if it can't sell its exports abroad because everybody else is still in a terrible state, then there's no ability to overcome the crisis just on the domestic front. You need that foreign trade as well. And foreign trade has been severely hit already. You can see the early trajectory between 1990 and 2008 along that dotted blue line was there. Then after the Great Recession of 2008, the trajectory is much lower along the dotted yellow line. And now with the COVID, we're talking about an even further drop in world trade to levels not seen, well below 30 or 40% below where they were at the time of the beginning of this second decade of the 21st century. That is an indication of how difficult it's going to be for countries like South Africa and other emerging economies to get out of this slump, not only the so-called advanced economies, but also in particular the emerging economies, because the world trade has been crunched. And that's even before we start adding in the new battle that's taking place between the US and China over world trade and technology, and the talk that the US has of trying to block, curb and restrict China's exports and trade and ability to influence world developments in trade and capital flows and technology. So that a major trade war is likely to ensue after this pandemic, which can only make that situation worse. What to do? Here, Chair, I'm coming towards the end. Here are a few things I think that we should consider both internationally, but also in South Africa. The first and foremost thing, which comes startlingly out of the data on South Africa and many other emerging economies, is that the debt, external and government debt, is so high that these governments cannot help their people simply by trying to also sustain and debt service the bondholders, the private sector bondholders and the official bondholders, governments and otherwise, on their debt, both externally and also domestically. So it seems to me the first basic demand that the labour movement must be having, the government ought to adopt, is that they are not going to continue with this debt service. They're going to cancel this debt. They're going to ask the Chinese government, put that debt, write it off. They're going to ask the IMF, write off World Bank, write off that debt. And then they're going to turn to the private creditors and say, look, we want you to write off this debt. Of course, they won't, the private creditors in particular, but who knows about the official creditors as well. But that's the battle that can then begin, the government could begin. We need to introduce capital control so the flow of money just doesn't disappear. And all the rich in South Africa or the foreign bondholders and others who own all that 90% of wealth in South Africa don't shift it out of the country. We need to have controls through the banking and government system to ensure that that doesn't take place. That's a perfectly reasonable demand on the part of a government in order to help its own people. Above all, we need to begin to raise the question of the socialization of industry and finance in South Africa and other countries, so that we're in a position to plan the economy for investment in public services, housing, education, transport, and above all, health. What stands out from this crisis is the need for public health systems that can absorb such pandemics in the future, can do the testing, the tracing, has enough staff, has enough hospital beds, intensive care units, and there is research going on sufficiently to produce vaccines which can help us in any future pandemics which are sure to come. And those are the sorts of things we must demand, it seems to me, in the labour movement. The lessons internationally are that capitalism caused this crisis. It's not the virus. We don't have the time to discuss that, but capitalism causes this crisis because it has introduced so much industrial farming, logging, fossil fuel exploration and other things, so that it's driven across very remote and wild areas into areas where wild animals with these pathogens have come closer to humans, and through industrial farming and markets and so on, it's led, according to the science anyway, to the shifting of these viruses from animals into humans. And that's why we're having these pandemics. And that's the result of uncontrolled expansion by capitalism across the globe. What we've also learned is that the market doesn't work. The market didn't protect people from this. The health systems were inadequate. Governments had to intervene because the existing market system wasn't able to do anything about it. The pharmaceutical companies have not invested in vaccines or in treatments in advance of this because it wasn't profitable. And so what we've seen now, we need planning for the health system and also control and direct influence by governments to achieve this. It's exposed, above all, who is it that really matters in this world when it comes to production. If workers stop working, nothing gets produced. But there are also certain workers that it's absolutely vital that they do work. And I'm not just talking about health workers, I'm talking about transport workers, retail workers, power engineers, plumbers, all sorts of a range of workers who are vital to any production. They're productive in an economy. But I can tell you jobs and workers who do not really be productive. That is hedge fund managers, banking executives, real estate executives, business services, advertising and marketing executives. If they all stop work, which they haven't actually, many, but if they all stop work, will we notice? No, we wouldn't even notice that they'd stop work because they don't really matter in terms of what we need in a society. Their jobs are the interests of capitalism in order to try and circulate and increase profitability, but they're no use to us. And it's the people who really matter, the workers who really matter, who are paid the least. The jobs I've just described that are totally unproductive and useless are paid the most, and the people who really matter in terms of meeting social need are paid the least. That is something I've learned from this crisis. The failure of private healthcare and big pharma. We need a free public healthcare service, investment in research for the medicines and vaccines to protect the humanity from the future dangers that are coming. And we don't want to hand loads of money out to big business, which is what's happening in the US and UK and Europe and so on, with no control, no accountability, so that they can survive. We need to, if we're going to save these companies, then we need to have the state influence and the democratic control of the people over it through takeovers, so that we can plan production and investment and not look to return, which is not going to happen, to some sort of normal arrangement for capitalism in the future. Debt cancellation for poor countries, I've said, and also ending the tax havens where huge trillions of dollars disappear from corporations into places around the world where they don't have to pay tax. This is ridiculous when we need as much money as we can in order to help people in this crisis, and yet the corporations go on shifting their money into these places and nothing is done about it. Major public ownership of the key services. I cannot think of a more ready company that needs to be brought into public ownership nationally and internationally as Amazon, the huge online distribution company, which is making $10,000 a second at the moment and is dramatically increasing its sales and so on into the hands of one or two shareholder individuals, the head of which is Bezos, Jeff Bezos, who now has $139 billion in personal wealth as a result. This is a ludicrous situation where all these services just produce profit for billionaires instead of providing a public service in mail, broadband, banking, and so on, social media that we require. We need to move away from the system of billionaires to a system of public ownership for social need. So some of those questions you presented first have not been answered, but I will take them up as we go along. And that is where I'm at here.
Thank you so very much, Michael. I think this was extremely comprehensive. Someone was saying on the question and answer panel that there's a comprehensive input that is also a little bit grim, because it's kind of showing us that there's a lot that's going to come that we're not necessarily prepared for. But I appreciate what you said also during your input, which is the fact that this is not necessarily being brought by the pandemic itself. I think we have been moving towards some form of crisis, and obviously now the pandemic is going to exacerbate it. And I think this is the flavor, in particular for emerging markets itself, that some emerging markets are already moving into economic challenges prior even to the pandemic hitting them. So obviously then with the pandemic coming, it's going to be, or the pandemic setting in, it's going to be extremely worse. I Also appreciated something else that you spoke about, and in conversation with another comrade yesterday, we were saying that the nub of the economic crisis that is going to take place regardless of the pandemic was actually debt. And when you look and scratch and look at the surface itself, you can be able to see that a lot of the balloons that are starting up are actually linked to debt. So you have Apple or any other big multinational company actually going in debt so they can be able to buy their own stocks and those kinds of stuff, and those intricacies linked to that. But I appreciated what you also said now, Michael, in terms of the lessons and some of the things that we should push for, in particular is around debt cancellation. And just again to let comrades know that please feel free to pose questions in the Q&A panel. And I will be reading now a few questions from the Q&A panel to then give to Michael. And then Michael is already covering them himself. And then I'll read them out loud so comrades feel like they're covered. But before that, I wanted to ask you, Michael, something in relation to this current period and the rule book or the playbook that's around. I think more than 10 years after the global financial crisis of 2008 and 2009, we're seeing big economies tap into what they did at that point to save their economies. So my question is, with the proposals that you made here, what can be done, the 4 proposals that you put forth, what is stopping the global economy from trying something different? In your opinion, why are we not actually moving towards implementing the 4 proposals that you put on the table?
Well, Kia and participants, I think that the main reason, of course, is that many of those proposals will be directly against the interests of international capital. If South Africa and other emerging economies were cancelling all their debt or defaulting on their debt if they don't get agreement from their creditors, then there will be serious losses to international finance institutions around the world, to governments who have supported the IMF and the World Bank with funding. So there'll be hits to international capital as a result of defaults or cancellations by emerging economies. Of course, they do not want to do that. I'll give you an example. In the case of Argentina, Argentina has a huge $65 billion external debt. It can't pay it, it can't service it. So its new finance minister, who's on the left, has been approaching his creditors, which include mainly hedge funds and other institutions in the United States, but also the IMF, saying, look, we can't pay this. So why don't you agree to allow us not to pay it for a year or two, reduce the interest rate on it, make a little cut in, write off a bit of your debt, make an interest rate cut, or bring it down to say, we'll pay you 2% a year instead of 5% a year. Why don't you agree to that? Then at least you're getting some money and we can afford just about, I don't agree with him, just about to pay that sort of money. Reaction of all the creditors, including the IMF, was no. No, we want our money, pay our money. We're not prepared to take the hit, particularly the private creditors. The IMF says they've got $1 trillion ready to help countries around the world. So far, as you've seen in the case of South Africa, they've offered hardly anything, and it's a loan. It's going to go on top of the original debt. So there's not really much of a gain in terms of cancellation of debt. And they still have not agreed in any way to reduce the amount of debt which Argentina owes. So that's the situation. It is a class issue between the emerging economies trying to save the conditions of their people and the big international capital are blocking that. That's on that question. Same applies to the flow of money. You need to introduce capital controls so that you stop the flow of money going out by the rich and you control it through the banking system, what goes out. This is anathema, usually, to international capital. They oppose these ideas because that means, again, that rich people can't and companies can't sneak their money out when things go bad. And they made a big investment looking for it in profit. And if there's no profit, they want to take it out again. So that they want to stop any move to control the flow of capital. We know that they don't want the flow of labour. They only want labour to come in when it's cheap or they can go to a country and use the cheap labor. They don't want migration. They don't want those sorts of things which are disrupting. But what they want is complete free flow of capital. And the intervention of governments to stop that, to protect their currency and their reserves, is something that they also oppose. So capitalism will oppose all of these measures, including the others, which are even more serious because they represent a complete change in the social structure of the South African economy and other economies like that, which threaten the very nature of the capitalist system. You could say that because China has a different social structure than where the state controls things, where money, they have capital controls, where a sizable section of the economy is state-owned and state-directed, no wonder it is public enemy number one by the United States and other international capitalist economies. So that is why what seems perfectly rational, I think my 4 points are perfectly rational and reasonable, but international capital considers it otherwise.
Thanks, Mike. I think I don't want to derail us. It would be an interesting conversation for us to talk about why does international capital. I think that your 4 points are not completely rational. But I want to just read 1 or 2 questions that have been put on the question and answer panel, and also just to say that there are some questions that are filtering in from Facebook. So one question that is coming from Facebook is, will Chinese investment in Africa play a role in South Africans' recovery? And another question from the question and answer panel is, what would be the impact if South Africa undertook a unilateral debt repudiation in terms of being able to access capital going forward?
Very good questions. The first one, well, as I've said, that about 20% of South Africa's external debt is already owed to Chinese institutions, state institutions, and so on. So the question we have to, and that's been very necessary to get those loans from, but a lot of African countries have done this because they can't get money elsewhere. That's at a reasonable rate and a level which will allow them to expand their economies and invest and keep decent jobs and incomes up. All the sorts of loans they get from the international bond markets, from the bond investors and from the IMF and so on are so tied either to cutting their public services or having very high interest rates. So China has appeared to be an alternative to this. Its rates aren't always that low, but at least they're prepared to put the money in and often use that money to build facilities in countries like South Africa and elsewhere. And that has been a big investment boost to many countries in sub-Saharan Africa and elsewhere. And it's part of China's policy. They wish to expand and offer investment and credit to poorer countries because they see that as a way of building up their influence globally, but also to be able to extract resources and other things which exist in those countries for their burgeoning manufacturing and expanding economy, which they need those sorts of raw material imports. So it's to the interest of the Chinese state to do this. Will they continue to do this? I think they will. Will they do it on terms which are in the interests of South Africa and other countries? Well, that's a matter of negotiation and battle. I think China, if I was Mbweni, I'd be saying to the Chinese, look, you say you're doing this out of the goodness of your heart to help Africa with your investment and your loans. Well, how about writing off those loans and giving us a commitment to more investment at reasonable rates? That would be something I would propose to the Chinese. Whether they'll agree to it or not is an indication of just where they do stand. The other question you had, Kay, I've forgotten now, was you said, oh yes, how do we get any money if we cancel the debt? Well, the answer is no, you don't get any money. The alternative, you'd say, well, this is a position often faced with small economies with big international capital, that if they cancel the debt, if they default on the debt, they're in a position where they get no more money from the financial institutions of the North anymore. Interest rates for such money will rise drastically. So if there's no alternative, like if the international government organizations like the IMF and the World Bank aren't prepared to provide funding at reasonable rates, or China is not available, or alternatives like that, which a lot of small countries have to return to, then it's going to be a very difficult situation, because it means that the South African people themselves will have to organize their economy on their own in order to improve it. Now, I would say that that is not so disastrous as it sounds. But if you've got rid of all the debt because you're not paying it, there's a massive increase in government revenues that are available now. As we've seen, something like 12 to 15% is disappearing to foreign creditors at the moment. That would increase the amount of revenues that the government's got. Also, if you put on capital controls, you can protect the currency better so it doesn't collapse and the inflation doesn't pour in through imports. And you can start. You do need a social restructuring of the economy. You cannot go on as the economy is now, controlled by a huge bunch of big foreign or domestic minerals companies and banking companies and resource companies who have no interest in helping South African people except to make a profit out of them. You need to take control of those companies. It must be the same process so that you can begin to plan the economy to use the people's resources to divert the revenues of those companies, because people will still want gold and other minerals from South Africa. Don't worry, they'll be looking to get those purchases over the future. And if the government has now got real control of the revenues and the wealth of those companies and divert it to developing the resources of the people in South Africa, with still 30% of people not really having a job, this is tremendous potential for growth for South Africa if we can put those people to work in government programs, in infrastructure programs, and appealing to other people, and also to the workers of the rest of the world. It's not a question of appealing to governments so much, but as appealing to the labour movements of countries around the world and say, look, South Africa is in a dire situation, or other countries in a dire situation. Your capitalists, your bankers, your governments are refusing to help us. We want you to help us change those governments, stop those bankers doing that. Let's fight internationally to improve the lot of everybody.
Thanks, Michael. Just a few more questions. Someone was saying that basically there is sort of weakness in relation and fragmentation in relation to the international and I guess local labor movement. And in your opinion, what are what can concretely be done to manage working class struggles and fighting the ruling class? And another question would be, post the pandemic, what will we have less globalization or more internal economic focus, weakening of the global value chains?
Yeah, let me take that question first. One of the big problems with coming out of this pandemic, well, it will be slow, is because global value chains have been disrupted. By the way, bourgeois economics likes to call them global supply chains. Well, the difference is simply they don't like the word value because that implies some sort of exploitation of people in value terms. They're saying supply chains will be disrupted, which is obviously the case, that if it's happening in Europe at the moment, as companies start up again, they find they've got no suppliers for the raw materials or the components they need to produce the things or the services that they want to provide to the clients when they restart. There's a complete disruption of the supply chain, and this is going to continue for some time and may worsen actually, because the Americans now want to stop sourcing Chinese facilities in their trade war with China. And China is the biggest manufacturing economy in the world. So it's going to lead to quite a disruption in the supply chain and the value chain. That's a disruption to the value chain, which means the profitability of capital will fall because they won't be able to use the cheapest resources, the cheapest labor, the cheapest places where they can get in order to sell. So there'll be a serious reduction in profitability as a result of this disruption. And that's going to take some time to sort out if it gets sorted out. So that's an indication, I think, of a long-term depression in profitability and growth that could set in over the next few years as a result of this pandemic. On the question, is the labour movement too weak to do anything about this? Well, this is a bigger political question, which I put to the participants more than I should answer. Maybe other people will come in. All I would say was in conjunction with the question on the question list was that why has the working class weakened? Why have trade unions gone down and no longer so powerful? Well, this is partly due to the last 30 years that we've seen after the slumps of the 1980s, that there was a deliberate policy to crush trade union rights, to shift employment out of areas where trade unions had influence around the world, not just domestically, and also to privatize whole sections and reduce the ability of workers to organize, and new industries coming in that were never organized, that we haven't seen before in social media and technology, which are still not organized, which still have an opportunity to develop organization. Finish on this point here that in the late 19th century, after a big depression, which lasted from 1870 to the early 1990s, after as recovery took place, there was a big expansion of new areas of sectors of economy and new workers coming into it, new mass workers organizations developed as a result of that. And that was a great period of what they call the new unions developing in new areas, new sectors, not the old industries of the 1850s, but the new industries of the 1890s. That's the sort of thing that's going to happen, I think, over the next 10 or 20 years. And that if, as the economies recover, as they did after the Second World War too, you could begin to see a new period of labour movement growth and a strengthening of the movement. But it's been a long, depressing period for the strength of the labour movement, its fragmentation. Maybe that would reverse after this pandemic, but we shall have to see. But I'm open to what other people might say on this.
Cool. Thanks, Michael. Even, I'm sorry to bombard you, but just because this is the conversation that we're having and this is how it is, I still want to read some questions. But I want to say about something interesting to us that you said around what can be done, which is looking at big tech and making things around Amazon public services. And I think a lot of the conversations that are taking place in different platforms and spaces, we're not really looking at big tech capitalism and how this is going to be a new era and a new shape of how maybe capitalism will metamorphosize. And we're needing to look at and have deeper conversations in relation to this kind of animal coming in. Because I'm thinking over and above just Amazon and just social media as a blanket, we need to be looking at different platforms that should be basic services. So broadly around issues like communication, we should be able to access and have data for free and be able to talk to one another on Facebook and be able to call each other without there being costs. I mean, we speak a lot in South Africa. And a couple of years ago, there was a campaign around data must fall, that essentially data is an arbitrary thing. It doesn't cost network providers any money to give or provide or to have data. So we're struggling in South Africa having to pay a lot of money to be able to obtain data. And this is some of the things that are holding people back in relation to connecting. So a lot of the times conversations like the ones that me and you were having and others are locked in the confinements of those who can access information and can buy and purchase data. So I'm thinking in terms of the things of what can be done and making particular things public services and goods, we need to be looking at telecommunication instruments or data being for free and any other person being able to access it. But there's another important question here on the chat, and which is, in your opinion, how will the global depression or the challenge or the crisis come and affect a government's responses to the climate emergency? So how will this affect government's responses to the climate emergency?
Yes, I saw that question. Well, of course, the government's response to the climate emergency so far has been nothing short of pathetic. We've had international climate conferences which have agreed to certain figures to control the level of carbon emissions in order to stop global temperatures rising. Those targets have not been met by hardly any government in the world. They haven't introduced the measures to curb emissions, to remove to renewables against fossil fuels, and so on. So none of the program, the solution to the question of climate change and global warming has been dealt with. Just today, we had a report which showed that if we continue as we are now, eventually by the end of this century, over 1.5 billion people will be in temperatures equivalent to Saudi Arabia across the world. This is the situation of the level of temperature increase that is likely to happen unless something is done about it. But governments on the whole are not, just as they haven't on the pandemic, they ignored the warnings about pandemics and virus spreads because we've already had them in the past. They didn't prepare for it. When it came along, they acted as though it wasn't going to hurt them, and then they were hit really hard by this virus. Many of these governments are still saying, well, it's not really serious, or we should just let it rip so that everybody who might get it dies and then we can carry on, or now they're saying, can we come off the pandemic, the lockdown, and get back to business, because they don't really want to deal with this health crisis which has resulted from the virus. It's the same attitude towards climate change, that they want to push it back into the future. We're not bothered now. No, we're not going to stop logging. No, we're not going to stop fossil fuel industries expanding. No, we're not going to do any of those things because it's not in our interest profitably to do so. So it's going to be very difficult to turn around the climate change emergency into effective implementation and saving the planet over the next 10, 15, 20 years. It is obviously something we have to continue to battle for and mustn't allow governments to get away with doing that. So that's the answer to that first question. And I think I saw some other questions on the list of the Q&A, which perhaps I could deal with if I could. Namely, some people saying, the first question I think is key, look at all that money that's been pumped in at the moment, particularly government spending around the world. Government debt's going to rise dramatically in order to try and do this. To help people during, well, supposedly help businesses mainly, but also people during this period of lockdown. What will happen then? Well, there'll be huge debt that government holds. And what we're going to see is a struggle between governments trying to reduce that debt by introducing austerity measures, increasing taxes, trying to get public services down in order to reduce that debt. South Africa has already got a high debt, so it's in a position where it has to apply that policy if it wishes to preserve the current business as usual system. So it's going to be trying to drive that debt down. And yet, on the other hand, people will be demanding better public health services in order to avoid future pandemics. So we're going to have a battle over that particular issue. And it's going to be, just like it was after the Great Recession, an attempt to impose austerity, which was done. This time, we'll see whether another leg of austerity, another leg coming forward out of this can be imposed by governments or not. Some people have raised the question, what about basic income? For those people who know, there's an idea of universal basic income. Forget benefits and so on, just pay everybody a certain amount of money per month, per year, whether they're working or not. So at least there's a certain level and standard of income. My reply to that be, I think that's quite a good idea during the lockdown when there's nothing happening, nobody's working. You've got to give people money. And the systems adopted by many governments are just totally inadequate to meet that. There is no income support for millions of people across the world as a result of this pandemic. And where it's been done half-heartedly. So a universal basic income payment paid straight away by the government out of the accounts would have been a very effective way. But longer term, I don't think that's the answer. The answer we need is basic services universally delivered to people, free at the point of use. We need free health, free education, free transport, free communications, free even staple foods and production and nature, which could be provided through a plan organised by governments and people involved to provide universal basic services. And that's where we should be starting. When people have universal basic services that are coming to them free, then the question of universal basic income becomes less relevant. People are working to produce a better economy, not just hoping for a bit of income to tide them over. I haven't got time to deal with the other questions there, Kia, because I can see that David and other panelists are saying, how about get some contributions from the floor? So we'll see what they have to say.
I mean, we can. I'm very open in how you wanted to run this session, because would comrades who were part of the panel in the beginning would like to come in and speak, or should we just then read the questions the way it is? Because at the moment it's just me and you.
Right. Okay. Well, I'm trying to answer also some of the Q&As by typing up answers on those. I can attempt to do some of those live now if you wish, Kia. For example, somebody's raised the idea of, I don't know if participants know about what is so-called modern monetary theory. Modern monetary theory is so governments are spending loads of money presumably to get us through the lockdowns and revive the economy. Personally, if you read my blog post, you'll see I'm not convinced that spending will succeed while the profitability of capital remains low. But there's a huge amount of spending going on. And the usual way that governments raise money to spend is either by taxing people. If they're not going to do that, then they have to borrow. What they usually do is issue bonds, government bonds, which Lots of institutions like to buy, even individuals, because governments are supposedly safe and don't default on their bonds, and therefore you can get an interest which is very, very safe. So government bonds are the usual way of raising funds. The modern monetary theory people say you don't even need to issue bonds. All what you need to do is the government spends the money and the central bank prints money, or it credits in the government accounts of so many dollars or so many rand. Where's that come from? They just create it. And that in that position, the government's then got as much money as it wants, interest rates don't rise, there's no bond holders, and we can just print money indefinitely until the government spends enough to get the economy back up and running. Well, my argument against that, I mean, it sounds great. Well, I never knew that. All you had to do was produce money and the world's problems are solved and governments can spend accordingly. But if the social structure of an economy hasn't changed, if the Amazons of this world, if the big banks of this world, if the big mineral companies of this world have not been touched, how is the government supposed to take the economy forward, even if it's got money coming out of its ears thanks to the central bank, if these companies won't invest in their industries or elsewhere in order to provide employment and income? If they won't invest because they don't see a profit in it sufficient to increase investment, then it doesn't matter how much money is being printed and put in the hands of the government. In fact, the possibility is that you'd have a serious inflationary spiral because this money would either end up in the stock market, boosting stock market prices all the time rather than being invested, or would actually lead to an excessive demand appearing in the goods and services industries where they're not investing to produce more, and if there's an increase in prices, so capitalists increase their price to take advantage of this extra demand rather than doing anything else. The argument against that is, well, eventually it will mean that they'll invest more and everything will be fine. Well, I have great doubts about that. I think it's much better to look at the social structure of the economy, changing the structure of the economy, bringing in planning and control, and so that we can organize society and its resources, rather than relying on some sort of money trick that can pull economies out of their depression simply by the use of money circulation.
Cool, thanks, Michael. We're going to allow participants to probably just please raise their hands and maybe allow participants we'll switch on their audio and someone to intervene so that they don't just hear me and Michael's beautiful voices. So if anyone would like to say something at the moment, please raise your hand now in the Zoom function so we can be able to hear your voice. I think there was a point that Michael has said, which he's very looking forward to comrades to engage and let us know the context in South Africa. So would be very keen to hear from comrades now in terms of what their thoughts are. There has been questions in relation to the weakness and fragmentation of the labor movement. So I'd be very keen to let someone from the labor movement probably to say something on their thoughts around this. And there's also been a question which has come up in different shapes and forms around how do we advocate and push for some of the things that you've put forth, Michael, that can be solutions like debt cancellation. So I'm just going to then give an opportunity to Lenny to just share with us his thoughts.
Can you hear me?
Yes, we can.
Okay. Hi. First, can I, Michael, if I may, the choice of your input, speaking about South Africa as a developing country, as part of Africa, and the references to emerging economies is a categorization of South African capitalism in a way that I think the left in this country is often grappled with, particularly with our comrades globally. Because in inserting South Africa, the South African capital, as a sort of in the same sphere of social relations globally as if we are purely at the mercy of global capital, is a false and an inadequate understanding of South African capital. Now, the first political problem with what you've been raising is, in many ways, in the advanced capitalist countries, that picture of a long recession, of no investment, of government expenditure being low, etc., 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 has been politically a weapon in the hands of the left in the countries in the north to show that 30 years of neoliberalism has failed and there's need for a new reset. In South Africa, the picture you've painted is a picture that's actually presented by our government as a reason for austerity now. In other words, we're at the opposite of the spectrum, because you've, I think, have underestimated the strength of South African capital, which is actually the driving force behind programs of austerity here. Because South African capital has a twofold nature. On the one hand, it is part of global capital. So, for instance, the big South African monopolies that dominated own something like 85% of all the shares traded on the Johannesburg Stock Exchange up until the 60s and 70s, largely opened up either primary or secondary locations in London. So they got involved in global movements of capital that meant they acted in ways that are anti-South African as a nation, as a country. And unless you understand that, you can, as a left-wing person, play into the hands of the South African government. So just a couple of examples, just to, because I don't want to hold this whole thing at ransom. When, for instance, the issue of debt, something like 80% of South African private debt that's through the selling of bonds is rand-denominated bonds. That's actually held by other South African capitalists, not global capital, South African capitalists. In other words, the very people who currently are I would argue, are the social base of the South African government, of this ANC government, are the big South African capital, the Ruperts, the Oppenheimers, etc. They are actually the owners of South African private sector debt. So government can't use that as an excuse. They can merely, if they had the political will, if they had a social force that challenged them, if we had a strong labor movement, we could campaign and force this government to actually renounce. We don't have to go to the IMF and the Real Bank and the World Bank and to global capital. We can push the South African debt holders to take a haircut. So this is a political problem. So in a way, it would have been useful for us if your input did two things. If you focus on the uneven nature of world capitalism and draw conclusions there, and then we could have a discussion about how South African capital is inserted in that. And actually, often on the left, and again, I'm sorry I'm saying this, but I mean, we've often faced problems on the left that our global left comrades often insert South Africa as a so-called developing country. And actually, it's a false understanding of South Africa's global role. If you talk about the movement, your stats on the flight of capital, one of the big things that drove the pressure that South African bourgeoisie put on the ANC when they came into power was that they were seeking the vehicle for South African capital to go global. In other words, they wanted to, it wasn't a problem of we didn't face the problem of having global capital coming in and determining social relations in South Africa. We had a case of South African capital wanting to get out, and that's shaping the political economy of this country. So, I mean, that needs a longer discussion, but it would be useful if we could find some way of having in a way, challenging sometimes the understanding of South African capital as some kind of comprador, localized bourgeoisie. And one of the big things that it has become a global capitalist player, including in Britain. I mean, it's some of the most significant owners of capital in not only in the British stock market, but actually levels of the biggest single owner of private healthcare in Britain is South African, offshoot of a South African company. You know, elements of retail capital, etc., etc., etc. So all I'm saying is it would be useful if you could have some, if you could share some experiences of what that implies for the left. But anyway, thanks for your input. As I say, it's a longer discussion, but it would have been nice if we could add that.
Thank you so much, Comrade Denny. Comrades, just wanted to say that this brief opportunity for us to intervene from the floor is just an opportunity to be able to share some maybe broader comments and thoughts that we're not able to translate via text. It's not necessarily an opportunity for us to make a miniature input. And I also would like to highlight to comrades that this is going to be a webinar series. So there will be particular things that Comrade Michael will not be attending to right now and might be covered by other speakers and other panelists in other spaces. So please take note of that. And even if we don't handle or tackle your question now, it will be covered at another opportunity. So before I hand over to the another person from the floor, I think there's something being placed on the chat by Patrick Bond, and I was wondering if you had seen it, Michael.
Yeah, I've seen that. Yeah, just seen that from Patrick. Yeah. Do you want me to answer that, or you can take some more, or what?
I can let you answer that, and then after you've answered that, we can let two more comrades come in, and then I'd like us to start looking at how do we draw some of the threads together. Is that fine with you?
I think Lenny's comments are absolutely correct. Yes, I did emphasize the difficulties that emerging economies have got in the international situation. He makes the point that, of course, South African capital does exist. It's not some sort of appendage to imperialism. It has its own independent position, but so does every country. India capital, even Bangladesh capital. When people say to me that the Bangladesh workers are exploited by retailers in the UK, my reply is yes, but the Bangladesh workers are exploited by Bangladesh companies in Bangladesh, textile workers. So there is a capital and a class struggle within the country, and South African capital in particular is a strong one from the historical basis which it had of the influx of white secular capital in the past and its building of its position during apartheid. So yes, the big billionaires of South African capital exist, and they do control the ability and weaken the ability of the government to do anything in the interest of the mass of the population in South Africa. That applies to lots of emerging economies. So it's a combination of the two, isn't it? And when you say that we need to cancel debts, you need to introduce a decent public health service, you need to restructure the economy, that means restructuring the economy within South African capital. It's not a question of just removing or taking over a few imperialist companies, but the whole basis of South African capital, particularly in the big resource companies which exist. So Glennie is quite correct to correct me in the emphasis that we should make in that area. Patrick's question is that, yes, there's an international issue here, that if there's not enough funds in order for countries like South Africa and others to be able to help people during this pandemic and this lengthening slump, so what is being done internationally to provide any support to countries around the world? Because you could say, well, capitalism has a bit of an interest in ensuring that countries don't go down a hole, otherwise it might have the resources or the companies that it can exploit, but also it might actually engender protests and revolutionary movements in countries which it would like to avoid. Patrick raises the question of the IMF leadership. The board looked to try and raise the funding it might have available to help countries around the world. It has $1 trillion, which sounds quite a lot, but isn't really when you spread it across the world, which is available for members' contributions and reserves to hand out in the form of loans. So it would still mean that they'd have to be paid back. The board has proposed to double that fund so that it's got the opportunity to provide even more money that would be more effective. But that's been completely blocked and opposed by the members of the board, particularly the United States, representatives, but also some of the European governments. They're not prepared to expand the size of the IMF to help the so-called global south, even with loans. So the idea that some people have that this is a solution to the problem, I don't think will be adequate. South Africans, other emerging economies, and the people in those countries, as Lenny has pointed out, have got to organise against their own capital and organise for a change in their society, and also not in addition to blocking the and cancelling the debt there. But the idea that we're going to be saved by the IMF having extra money, which is a view that's being expressed by some, is not going to be, in my view, successful. It's not going to happen. There's not going to be extra money. It's still loans. And at the end of the day, we're probably not going to see enough provided by these international institutions. There is total lack of international coordination by global capital to help people through this pandemic. It's every government for itself in the way they're doing the lockdowns, in the way they're providing support to their populations and to their businesses. There is no coordination. In Europe, there's no coordination. Italy and Spain and others asked for extra money from the rest of the European states recently. The European states of the north, which have got more money, said, no, we're not going to give you carte blanche extra money because your economies are in a mess because of the pandemic. That's your problem to sort out. We'll give you some more loans, more money, put more debt on all the debt you've got already, but we're not going to help you write off those loans. We're not going to give you cash so that you can survive. We're not going to redistribute. It's the same argument internationally. As far as I can see, there is no prospect that we're going to have some sort of international coordination where the world's richer countries help the world's poorer countries in any way during this pandemic.
Thanks, Michael. There are some more questions and comments coming up on the chat and the Q&A panel. But while you sort of read around that, I'm also going to let then Comrade Maureen come in and just briefly intervene. And then after Maureen, Alison can come in.
Hello. Can you hear me?
We can hear you, Maureen.
Okay, perfect. So thank you, Michael, for that insightful or thought-provoking presentation. There are a number of areas which I would love to argue around, but I would love to talk about the area where you talked about unions and workers having to redefine themselves, perhaps even the possibility of new unions emerging. So I'm from Zimbabwe, living in Zimbabwe, where you all know that 85% of the population is working in the informal economy. And in that context, the pandemic just literally was just a tipping point on a already dysfunctional labor movement or struggling labor movement. And I have to agree with you, and this is what I've been talking to my comrades about, to say, perhaps this is a space for trade unions in particular to not expect a special seat, maybe on a tripartite negotiating forums with the government, but for them to form coalitions with informal associations in trying to come up with interventions that work. It's important that during this time, trade unions in association, in collaboration with informal associations, need to put pressure on possible interventions such as universal basic income or other social safety nets that might be needed. But the truth of the matter is trade unions need to be reinvented. They need to redefine themselves. And at this point, I think there is an opportunity for them to form collaborations with other players that they normally wouldn't have formed linkages with, for them to strengthen their position in as so far as protecting and promoting workers' rights. But I do agree with you strongly that in all of this, I think we need to protect the workers that need, because it is the workers that need that get paid the least and feel the brunt the most. So yeah, maybe the trade union, it's a wake-up call for us to think differently, work with different players, because the costs are much too high for the workers. And it reminds me of Karl Marx's assertion when he said, workers of the world unite. We have nothing to lose. And who is workers? Are they in formal sectors only? Or we might need to also reach out to the people that are working informally. Yeah, that was basically my my contribution to that in agreement with Michael's observation during his presentation.
Thank you so much, Maureen. Thank you so much for for sharing with us. I'm just going to let then Alison please share with us.
Yeah. Hello from London, Alison McGarry. And I put a question up about really, and it leads on from the last comrade, about the paucity of the leadership of some of the South African unions. And I've been doing a project with COSATU with precarious workers in Cape Town. And I noticed that their demand currently is calling for import controls. And then looking at asking South African manufacturing to then use the minerals of South Africa, etc., to be able to produce goods so China doesn't get access to the markets. I mean, I think it's a false argument, but I think it would be useful if Michael responded to that, because it's a very common argument that has come up with labour movements, both when I've had discussions in South Africa and with other comrades in other unions globally. And the other question is really because of my ignorance, and it's about where at the moment is the workers' leadership? Where are they, and where are they looking for international solidarity to link up with other workers? It may be in the same sector, it may be for the same corporations to build union organising campaigns. Or is it really this prevalence of a reformist position of looking and relying on the home capitalists, aka the government, etc., to fix the crisis? I hope that makes sense. Thanks, comrades.
Thank you so much, Alison, for sharing that. Michael, if you don't mind, I'm just also going to give an opportunity for David to intervene.
Absolutely, because I'm not sure I can answer these questions about the South African labour movement.
Okay, great. So then I'm just going to let then David come in, please.
Okay, am I audible?
Yes, you are.
Okay, that's great. Look, I think a number of key issues have been raised in relation to the movement, and maybe we should get our Michael Roberts to do a little bit more study there, but maybe not. Maybe we've got a job on our better homework to do ourselves. But look, my point, in somewhat in response to Lenny's, is, you know, South Africa is an exemplar of combined and uneven development. From the turn of the century, we've had money markets which have been in advance at times of that of the United States and Britain in terms of the integration of different forms of capital. Hobson pointed that out in Imperialism, and we're still struggling with this extreme forms of combined and uneven development in South Africa. And yet South Africa hasn't really advanced very much as a capitalist economy if you compare it to others. I mean, I remember when I was teaching in Dar es Salaam in 1980, there was a coup in South Korea. At that time, South Korea's GDP was a quarter of that of South Africa. Now I think South Africa is probably a quarter of that of South Korea. In other words, we've had decades and decades of wasted capital in a sense in South Africa. We're still basically a semi-colonial economy in the world's global system. And we're struggling to export our commodities, our raw materials at ever declining real rates, and our currency reflects, you know, some of that. Now, how do we organize around that? I mean, my view, I just want to put this forward now, it moves a little beyond the economy per se to the political economy. How do we get command of the state? Basically, we can have 100 ideas. We've got capital, we've got surplus capital in South Africa. It's sitting there in many, in the banks and the finance companies and the like. But how can that be mobilized and not frittered away? We've just come out of a period of extreme looting of the state. We don't have any control over that state. It does what it wants, and even now we see more and more authoritarian trends within the state. Many of the more liberal people feel that at least the state is not expropriating capital, the state assets as it did in the past. But we know that every crisis will lead to a surge of capital towards big companies and so forth. It'll move from the working class, despite whatever they say in welfare at the moment. It'll surge again to the capitals in South Africa and to paying back, our debts internationally. But if we have a position where we cancel debt, and that is exactly where I think we should be, we also have to have reread State and Revolution, and to see where we are placed to be able to determine our future, rather than what I see from the labor movement now is so many appeals to the ANC, please, we're suffering, we're struggling and so forth. It does go back a little to the question of how we organize, but we have to know the state is critical. And I think we need a very critical examination of the South African state, particularly at the moment, and to be able to develop a set of transitional demands, all those marvelous demands which are there in the various documents that have been put forward by SAFTU and other combined, Abashlali and others. All of this, are our absolute minimum demands, and a transition towards taking over, the command posts of capital in South Africa. But we have to know that that's going to work for us, that we have to know that we're in charge, and that we have the command in the municipalities at every level of the state. And we don't have that now. That's our critical task, in my view. Thanks.
Thank you so much, David, for sharing that. And I just wanted to say also, comrades, that of course, we cannot go through all of the questions and comments put forth. And the beauty of these platforms and many other platforms is that we can continue to engage after this. So like I said earlier, Michael Roberts has a Facebook page, and the presentation will be posted on the Facebook page, but also comrades can engage Michael further on Facebook and in other platforms too. And also feel free to engage Amandla Media on Facebook, engage us on Twitter, and also engage us on YouTube if you'd like, so that we can keep this conversation alive. And you feel like there's a pertinent point that wasn't taken up, please feel free to do so. And I just wanted to say then, I want to hand over to Michael to probably either answer particular questions that have come through to you, or we could move ahead to sort of now pull the strings together and motion a closure. That's okay, Michael.
Yeah. Well, what do you suggest then, Kia? Shall we? I mean, there have been a few comments by some comrades. I don't know if I have anything much to add. David is making the point that South African capital is really not progressed much in the last period, for 30 or 40 years compared to the East Asian capitals. It has become a rather inefficient, unproductive capital system, and it is still being, as he says, Lenny says, it has a role. It's had a role in the past, even internationally, and it is still the force that is in control of the South African government and its institutions, not imperialism, but on the other hand, it's not really progressed to any sort of top-tier capitalist economy at all, even if it is relatively better than South Africa. And that demonstrates to me that the uneven development of capitalism is playing its role on South African capital. It remains really very much under the thumb of the big imperialist top seven. To tell participants that I'm writing a paper with another Marxist colleague, part of a book, which is dealing with the modern nature of the economics of imperialism. Just one fact that we found out in our work is that the imperialist countries that Lenin talked about 100 years ago or more, controlling through finance capital the majority of the world's resources and exploiting the workers of the global south, but also in conjunction controlling to some extent the capitalists of those countries. Those same imperialist countries have not changed. They're still the same G7 ones. Nobody's joined the top. Most of others are all different levels, mostly well down. South African capital is another one. But that doesn't mean to say that the solution to anything is in some way to blame imperialism and ignore the role of your own government and of the big South African capitalist companies. Of course, they are the people directly exploiting workers in South Africa and other emerging economies, and therefore we cannot possibly begin to transform the picture for them without replacing these big multinationals or South African companies in our economies and developing on the basis of workers' democracy and plans. And that means that's the only way governments are going to be able to transform the picture. So Alison raises the point that Satu and somebody else are asking for import controls as a way of protecting South African industry and manufacturing. I don't think will be a solution at all. It will just weaken the ability of South African capital or people to keep their jobs, because import controls will reduce the ability to get the best costs and so on. But also what we really need is capital control. It's not controlling imports. It's having control over the movement of capital, finance capital, which is freely able to move at the moment without any control by the government. That is the task, which is the big task as part of the program of the 4 points that I mentioned toward the end, rather than trying to control trade, which is going to be weakened anyway as a result of what's happened during the pandemic and afterwards. I don't know if I've covered all the issues there, Kia, but do you want to now, I don't know if there's any other questions or we want to sum up or?
I think we can start sort of winding down. I would like to say that maybe we could, if there's one last burning comment from the floor, if comments would like to answer, to raise their hands, please do so now. If not, I wanted to opportunistically get your opinion, Michael, on the international financial institutions. And next week we'll be having a webinar looking at them. I mean, there's been a lot of conversations around special drawing rights and obviously looking at the IMF and the World Bank for loans and stuff. And I was hoping to get your opinions on that.
Well, I think I'll partly answer that because it's raised by Patrick Bond in the questionnaire. And the argument, I think the big point that we have to be aware of in the labour movement at the moment is that there is no real international coordination to help countries or people out of these crises coming from the international organisations. These organisations, when they were set up in the post-war period, were regarded as some sort of international global force which would help the world, like the United Nations and so on. This was a misrepresentation of reality, because the IMF and the World Bank are really organisations controlled by the imperialist powers, in particular the US, and that if they don't want to shift and distribute resources and money to the other countries through these organisations, then nothing happens. So these organisations have been reduced in their ability to play a role of fiscal transfer or resource transfer to the third world countries. And anyway, their whole program is based on loans, as I'm saying, which means that you end up with more debt and more interest to pay and more debt to service. And it's an unending vicious circle. The Greek government has found that out. It has now have a debt after the crisis it had in 2010, which will have for the rest of this century. The rest of this century will not be able to pay that debt off, although it's being asked to by the organisations which lent it. And so this will become a perpetual debt, hitting the resources and the income available for the governments and the economy. And that applies to so many other economies around the world. The pandemic is going to add hugely to global debt. And international financial institutions like the IMF, like the World Bank, like the African Development Bank and so on, either don't have the resources to help countries to do that, and there's no attempt on the people who are running them and controlling them to offer more, and secondly, all they were going to do is add more debt. So there is no answer there. There is no answer there for the labour movement of South Africa or international labour movements. We're going to have to rely on ourselves to organise and then to establish politically governments that are in the interests of the people, not just carrying out the diktats of the IMF or big business in the country.
Thank you so much, Michael. Just before I give you sort of a final opportunity to wrap up, I wanted to take this opportunity to tell comrades or to reiterate one of the most key points that you came up with, which what can be done and what we should be pushing and advocating for, which is the 4 points that you put forth in relation to, we should be pushing for debt cancellation, we should be pushing for capital control, we should be pushing for the socialization of industry and finance, and most importantly, we should be planning and demanding jobs, investments, and the expansion of public services and things in relation to housing, healthcare, education, and of course, telecommunication. I think these are the key 4 points that we could be developing action and activity around. And also just to tell comrades, I personally would like to say thank you so much for joining us. And again, this is the first session of a series, and we will be sharing on social media when and how we'll be having the next discussion. But the next discussion will be taking place around international financial institutions like we've spoken about. And also then to say thank you so much to the co-hosts, which are NALEDI and TSHISIMANI. And I'm just going to give you a little bit of an opportunity, Michael, to either say goodbye or thank you.
Yes, and thank you everybody for participating. At least most of you stayed towards the end, as I can see the data there. I just want to add that I haven't been able to answer all the questions either in the chat or in the questionnaire at all. Lots of them have been missed. People want to come back and have a go at me and things I've said. All I could say is that perhaps you can go to my blog site and to my Facebook site, where a lot of the questions raised there have been answered in some form or other over the last few years. So if you search my blog site, say for modern monetary theory, what my view is more thoroughly, then you can look at that. If you want to see about imperialism, that's also there. If you want to see about the question of cancelling the debt and what happened in the past with other governments, I've also got material there. So we can continue this dialogue on my blog, and of course in your websites that you're doing in the future, and on my Facebook site. And I will learn from that about the situation in South Africa and elsewhere as well. And that, by raising everybody's understanding, then we can begin to be effective in our action.
Thank you so much, Michael. Again, once again, thank you so much for all the comrades that have joined us. I mean, I think this is just the beginning of continued conversation, continued dialogue, as I think there's a lot of challenges, grimness, and difficulties that the pandemic has brought us. But I think most importantly, the one panacea or great thing that the pandemic has given us is an opportunity to connect with one another and continuously be in conversation. So let's not only stop here, let's continue talking on either Facebook, Twitter, or blog posts, and ask questions and try to engage. I think this moment in time is an opportunity for us to be able to share information, build our knowledge. So when we're able to physically take the streets, we are equipped. Thank you, comrades. Please be safe.